stock to flow is infinite, which means it's infinitely hard because a rational actor, and I consider myself a rational actor.
In this video, we learn about Michael Saylor's original investment rationale for buying Bitcoin back in 2020 from a Raoul Pal interview. Michael Saylor, for context, is the previous CEO of MicroStrategy, which is a US publicly traded company that added Bitcoin to its balance sheet, and is a huge Bitcoin proponent. Welcome to Blockchain Syndicate, where we provide valuable insights into the world of Bitcoin and cryptocurrencies. Don't forget to obliterate that like and subscribe buttons for more content.
You're going to have 1% or 0.5% of it left. You're going to lose 99% of your money in 100 years. By the way, Rob, I know that to be the case. I have a house in Florida, a nice house in Florida. It would cost you $15 million to buy that house, $20 million today. I have the sale deed for that house in 1930. You know what the number is on it? $100,000. $100,000 in 1930. Count the number of years between 1930 and the year 2020 and figure out what the depreciation rate was on fiat currency in the US dollar. You're going to lose 99% of your money if you put it in cash. Okay, so we all agree on that. Okay, this is the thing that people don't say. You're going to lose, for sure, 85% of your money if you put it in gold. You're going to, for sure. By the way, and that you're assuming that nobody invents a better chemistry for gold. We don't find gold anywhere else. Nobody invests any more money in gold mining. Nobody gets any smarter, and the gold price doesn't go up too much. And if all those things are true and people still use gold, you're going to lose 85% of your money. But if human ingenuity kicks in, gold's a commodity, you're going to lose 90% of your money in gold. Now, if you put your money in Bitcoin, you're keeping it all. You're not losing anything. If you don't believe in fully diluted Bitcoin count, you have a 15% loss in 100 years. But if you do believe in it, there's no loss. Now let me give you another analogy. You want to cross the Atlantic in a vessel made of fiat currency. It's like stitching together a bunch of inflatable rafts. By the way, you're crossing the Atlantic in an inflatable boat with a leak in it. Or you want to cross the Atlantic in a gold vessel. You're crossing the Atlantic in a wooden ship. It's sort of good, but it's rotting, you know? It's a wooden ship. It's better than inflatable. It doesn't have a leak in it, but it's wood and it's going to decay. It's decaying 2-3% a year. You're crossing the Atlantic in Bitcoin. It's a steel hull freighter. The thing about steel, you know, like I say to the guys, I say, well, why do I want a steel boat? They go, well, because steel is indestructible and the welds are harder than the original steel.
Michael Saylor said many different things there, but what I want to highlight specifically is that even the best traditional stores of value are not that great at solving the problem everyone is facing today, not just large corporations, which is the erosion your wealth every moment of every day from inflation. He compares building materials to Bitcoin and fiat to illustrate his point of longevity and ingenuity. Now traditionally are other ways of solving this problem, such as buying real estate, but there are other costs associated such as maintenance, property taxes, and operations. Bitcoin, on the other hand, doesn't require any of those, and levels the playing field, as not everyone can go buy tons of real estate just on a whim. Keep that in mind and let's jump back in.
A 5-story wooden building. I built, you know, that's fiat. I build a building of stone, you know, and masonry. Look at all of Europe, all of beautiful Europe. Every building in Europe, 5 stories, 6 stories. That's as far as you go, you know, with brick. What happens when I invent steel? I build a 50-story building. You think steel is twice as good as bricks? Yeah, you could build a 100-story building, right? Steel is elemental to or instrumental to New York City. There is no New York City without steel. There is no skyscraper. There's no science of civil engineering until you invent steel. Right? You could say iron maybe if you want, but without the element of steel, there's no civil engineering. Now flip to aerospace. Aerospace. You ever see a plane made of steel? No, they don't fly. Steel is the perfect element except for the fact it's too heavy to fly. That's why we use aluminum. No aluminum, no airplanes, no industry, nothing. Take away aluminum, the entire aviation industry goes to zero, right? Andrew Mellon made his money on aluminum. Andrew Carnegie made his money on steel, right? These are fundamental things. These were technologists. The entire industry is based on it. Now, the gold standard, good idea in the 19th century, right? The best idea you could have in the 19th century. But I mean, just like wooden ships, pretty good idea to have wooden ships if you're the British Empire, if that's the best you can have, you know? Now along comes Bitcoin, cryptocurrency. It's when I say it's harder than gold, I mean it's not just 10 times harder because it goes 100 years without losing any of its value. I say it's harder because it's an organic nest of cybernetic hornets feeding off of encrypted energy. It's a living thing, which means that the miners are going to keep upgrading their equipment. The developers are going to keep upgrading their development. The nodes are going to change. Everybody, the ecosystem is going to change. And they're changing in this terrifying Darwinian, capitalistic, libertarian, aggressive, winner take all, hold no bars, no one companies holding like I've been CEO. I thought I was right. I was wrong. You could be the most brilliant CEO in the world. Anything that's controlled by a CEO is crippled. Controlled by a state is crippled. Controlled by a country, it's crippled. This entire thing is its own ecosystem. Gold is not going to get 1 million times smarter in the next 10 years. It's not thinking at all. It's a lump of metal lying there, right? Nicholas Taleb wrote Anti-Fragile. I think Taleb is brilliant. I love all of his books, read every one of them twice, right? Bitcoin is an anti-fragile, evolving thing. It's hardest currency because it's getting continually exponentially harder. It's getting harder, but it's also smarter, stronger, and faster than gold, right? It's smarter because I can create a computer program. I can put it on a machine behind that bar, and I can have it make 1 million trades with your crypto every night while you're sleeping and move it around, right? But I can't do it with gold. If I want to move $100 million of gold, I got to put it on a jet, fly it around the world. It's $250,000 to physically deliver $100 million worth of gold. I can physically deliver $100 million worth of Bitcoin in $5, right? $5 in 30 minutes, depending upon how risk averse you are. But if I want to move it, I can put a piece of software on it.
There you have it. If you're trying to store value over the next 100 years, Michael believes that the hard asset of Bitcoin is the best thing we have compared to ever before in history. This will change things. Now, does that mean go throw your life savings in Bitcoin? No. But when you start to consider what % of your portfolio are you looking to not touch and pass on to grow generational wealth for your future grandchildren, then you start to see how it is the long-term bet against inflation. Let me know in the comments section if you think Michael is full of it, or if you think has on to something.